For us energy investors, it was definitely a brutal day today. And we had a pretty big, brutal day in the price of oil yesterday. Yet, energy was the top performing sector. I think this is not reason to jump ship yet. We have to focus on more than the price action. We have to focus on the fundamentals. And there are some negative fundamentals that are coming our way. The biggest one, and the one I'm keeping the closest eye on with some concern mixed in, is the notion that cases are beginning to pick up in China. That is not ideal. We don't want to see cases in China. We know they're happy to lock down. They did before. We're going to hope that they don't lock down. We're going to assume that that's not the best way. We're going to be optimistic that having vaccines and things like Regeneron are going to make it so they don't lock down and so they do what they said they're going to do and test every resident, whatever that means. So I'm currently operating under the assumption China does not lock down. That saves the price of energy, but won't stop it from falling today. However, despite the dramatic move it's had so far this week, the price of oil down 8% this week. It's just at the bottom of its strong uptrend. Just, I believe, 2 weeks ago, July 19th, that was a significantly stronger drawdown than we saw. And we are at a higher low than we were at that point. So if the price of oil stops and turns around from here, it's a big ask because I can't really say what it's going to do. It's totally possible that it plummets a little bit and people just continue to sell. If the price of oil bottoms here, though, a local bottom, no reason for concern. This ends up being a buying opportunity. I did nibble today. Now, why am I not so concerned on the price of oil, and why do I expect that it actually will just continue in this uptrend regardless? I think it will continue in this uptrend, even if there is another day of selling. Well, I defer to the experts. I defer to the companies which say and are confident in continued positive performance. Now, wait, don't companies want to say they're going to do well? They want, actions speak louder than words. We saw some action. BP, the last, as far as I'm aware, major company to report earnings, not only reported fantastic earnings, increased their dividend. They're willing to take their money and give it to shareholders because they're so confident that more money is going to come down the line. These people are on the front lines. They sell the gas. They sell the oil. I try to be an expert, but I know for a fact there are people who understand the energy market better than I do, and that's the companies. And they're raising their dividends. I'm sticking with that, okay? So it's tough, it's painful, it hurts, it sucks. Yesterday we saw a big change in the price of energy or oil. We saw the stocks up. Today, the stocks were down as the price was down. Hopefully, the price of oil turns around and we have a very nice, very solid recovery back to where oil stocks should be. So we will see what happens. As for the rest of the market, okay, some very interesting things. A lot of stocks were down today. The markets were red except for the NASDAQ. Facebook was up big. Google was down slightly. Zoom was up big. AMD was up big. There were certain names that were up big, and they are favorite names. Zoom, I think, is a little bit crazy. Robinhood's not in the NASDAQ, but I think is a little bit crazy. There are obviously some stocks that are up, as there always are some stocks that are up. There are a lot of stocks that are down. So we got some bad info in the morning, jobs data. Apparently, these ADP reports aren't very accurate. No excuse, though. We got to work with what we got. Bad jobs data. Bond yields ticking up. That is crucial, okay? Something that's been giving investors fear recently has been bond yields. When bond yields fall, it signals a flight to safety. So when we got that PMI services, so services revenue, prices of services going up, that indicates strength in the sector. That caused bond yields to tick up. I'm viewing that as an optimistic sign Citi put out a report today that they expect bond yields to tick up and for that to hurt tech. I'm going to second that assumption. I am lighter on tech than I have been in the past, heavier on energy and other cyclical stocks, inflation type stocks, materials and mining and gold type stocks and energy, as I said. Those are my core positions, with a couple tech stocks I just can't sell, like Editas. And if this is the point in which bond yields begin to tick up, those stocks hopefully and likely will be in for a wild ride. We will see. We will see. Right now, today is a crazy day. I'm sticking to the script. It's been a long, painful journey of doing that. But I think we are closer to the end of the unusual and unexplainable and illogical behavior, which had been logical for a very long time. The tech rally had been logical. It basically has been logical up until this point, when bond yields fell as inflation rose. That's when things got wonky. I think that plays itself out, that bond yields rise and things begin to normalize in terms of market function, because bond yields should not fall with inflation. Bond yields should not fall with inflation. So until next time, peace out.